Hi guys, good afternoon from London, Wednesday 13th of March, just gone midday here. And just having a quick look, we just had some numbers out of the US, albeit a bit worse than expected, but numbers from January, so not really moving the market too much. Elsewhere today coming out, we do have the oil inventory numbers. So we'll have a look at the oil chart in a moment about how price could move. For oil and equities, I'm just going to switch over to the chart. We have seen a bit of recovery from downticks that we had to the back end of last week. So oil here, where we really started pushing lower on the 8th, 5 days ago, we're now back higher. And while I would recommend waiting for the numbers to come out, one of the key levels that I would mark up is that 58. So we talked about this yesterday, but also with these highs around there as a key resistance point. You can see just recently we have broken above yesterday's high. So following the API number from last night, sort of rectangling here, we have continued to push higher. So yeah, definitely a key level to bear in mind, this one where we're trading at now. If we were to get a big build or something, then yeah, sure, maybe we look at a trend line going and breaking to the downside. But for now, sentiment seems to favour the upside, and I'd be looking around the R2 and the $58 a potential point to get long should we break through. Got to imagine there's going to be quite a few stops at that price. You can see how important that $58 handle is going back to November, but also February from last year as well. S&P found a bit of resistance early morning around 2800 on the futures. We've now broken through that to test the R1, so highest we've been really since going back to sort of the 5th and beyond, and the sell-off we had on the 4th. We'll be looking at this hopefully to come back down to test 2800, maybe wait for the cash open noise to disappear before getting in, but that would be certainly an area I'd be eyeing up to get long. If we continue to push higher, 28.15 obviously key in that zone. Having a quick look here on that longer term chart, you can see going back to the highs that we had on the 17th of October, between 28.24 and 28.15 is a key level. Having a look at the euro, we've almost filled the ECB retracement to exact point where the dovish Draghi pushed the price of the euro down against the dollar. So that's still a target area I'd be looking at. Would expect a bit of resistance around there and the R1 for any dollar strength to really come back into this market. I'd want the trend line to go, and also around today's pivot point. So this rectangular area here would be the main sort of focus for any dollar strength or euro weakness to come back into this market. The pound as well, obviously worth keeping an eye on later today as the vote on no deal takes place this evening. We've pushed higher this morning, you can see not long ago just making a new high for the day. The pivot technically seems important, and if I was looking for a more technical trade to go short, I think that pivot break in this trend line would be something I'd be eyeing up. To the upside, key resistance points 132, but also looking at these areas of support, yes, so that turn to resistance. So you've almost got an area where I'd be looking for buyers above 132, sellers below the pivot and this trend line in this zone. Now we're trending higher. I would favour a push to that side, but I wouldn't be looking to get in any new trade based on that. So let's have a quick look over at that calendar. Again, just to reiterate, we do have next on the calendar some construction spending data from US and oil inventories as well. Hope you all have a good day ahead of you.